Hey guys, welcome back. Today, I'd like to have a real conversation about real estate and more specifically home equity and see if we have learned from some of the mistakes that a lot of us made back during the last real estate boom. But before we do, make sure to hit that subscribe button. I want to make sure that you don't miss any of my videos, and your subscription to my channel really helps. Before we dive into what's going on with real estate and home equity now, I think it's important to take a look back at the last big real estate bubble and the subsequent bust, as well as take a look at some of the things that led up to and contributed to the last real estate bubble. Early on in my career, I had an opportunity to work for one of the biggest banks in the country. I worked on the investment division of the bank. We focused on helping clients manage their investments, their retirement accounts, and I had the opportunity to sit next to a banker. So being in such close proximity, we overheard a lot of the conversations that were going on. And I want to explain a scenario that I saw occurring on a regular basis within the bank. And it wasn't unique to the bank that I worked for. All of the big banks were doing this. A customer would call in or walk into the branch and ask to talk to one of the bankers regarding an issue they were having with their checking account. Maybe there was a fee that they saw on there that they wanted handled, or maybe there was some other issue and they needed to talk to a banker. Well, I always thought it was interesting because one of the first questions out of the banker's mouth was, do you own your home? And I always thought that was kind of strange. And if the answer was yes, the next question was, why haven't you opened up your home equity line of credit yet? And so it begins, the process of using your home as an ATM machine. And it wasn't just home equity lines. People were refinancing their homes every time they saw that the value went up, and then they were able to pull cash out from their refinance and use that cash for a variety of different things. Maybe they wanted to do home improvements. Maybe they wanted to buy a boat. Maybe they wanted to buy a car. Whatever it was, they were utilizing their home as an ATM machine and taking all of the home equity out that they could. And I think we all know what happened next. Real estate prices started to fall. The next thing you know, people started defaulting on their mortgages. After a few years, we were right in the middle of the Great Recession and embarking on one of the most severe financial crises to hit the country in over 70 plus years. And now here we are, nearly 13 years since the big real estate bubble began to burst in the mid-2000s. It seems like we're sitting on record amounts of equity, and maybe we have learned some of the hard lessons about the dangers of using your home as an ATM. According to a recent article in the LA Times, homeowners are sitting on record amounts of home equity and are reluctant to tap into it. But don't get too comfortable. The big banks are aware of this, and they are ramping up the marketing machine again to encourage homeowners to tap into their equity via home equity lines of credit and refinances where you take cash out of your home. If you're considering a home equity line of credit or a cash out refinance, proceed with caution. And let's take a review of some of the lessons that we've learned from the last real estate bubble burst. Lesson number 1, real estate prices can go down. No matter what anybody tells you, real estate prices will never go up forever. I can remember as a kid and even a young adult, my family, friends, people telling me that real estate was the best investment and it'll always go up in value. Nothing could be further from the truth. You don't have to look back too far to see significant declines in real estate. In some areas, real estate prices dropped by more than 50%, and a lot of people are still feeling the effects of that today. Lesson number 2, there is such a thing as too much debt. The problem is it's tough to pinpoint exactly what is too much debt. What might be too much for one person could be completely fine for the next. And there are some people that think all debt and all credit is bad. I'm not one of them. Debt and credit used wisely can help you achieve a lot of things. It can help you get through school. It can help you buy a home. It can even help you start a business. So debt and credit used wisely can be a strategic thing to help build wealth over the long term. If a small drop in your income or a bonus that doesn't work out the way that you thought, or the temporary unemployment of a significant other causes you to miss housing payments or other loan payments, you might have too much debt. Lesson number 3, your home should not be used as an ATM machine. If you're relying on your home equity to maintain your lifestyle, that is a very dangerous path to be on. Your home equity has the potential to help you weather serious setbacks in your financial future. It also has the potential to provide serious benefits to you either in retirement or before. So using all of the equity in your home and making your home kind of like an ATM machine is a dangerous, dangerous way to go. If you've got questions about home equity, debt, or any other personal finance related matter, I want to hear about it in the comments section. Be sure to like this video, and most importantly, please remember to subscribe. I appreciate your support.